situation where jobs aren't there, consumer confidence is shrinking to record low levels. You're finding the borrowing capacity, even though supposedly it's there, it's not happening. It's not happening because there isn't a demand. Let's look at real estate. Housing is one of the biggest ways people feel like they have something in America. This is the way we felt wealthy. When our houses were going up in crazy value, we all felt like we had money. You could borrow it and use it, and we were deluded. And the interesting thing that's happened now is interest rates right now are the lowest they've been in a century. 4.5% for a 30-year loan. It's unbelievable, but no one's buying. No one's buying houses because we've all seen what's happened. Everybody's trying to hang on to money. Everybody's thinking this game is not over. Right now, banks are selling more homes than home builders. I mean, a lot of them are hanging on to things and not even foreclosing fully yet because they don't want to flood the market and have the value of prices come down even further. And yet, ARM rates, those adjustable rate mortgages, they need to be adjusted, many of them, over the summer and this next fall, and that's going to probably create more foreclosures, more than likely, unless the bankers figure out how to not let those rates adjust accordingly or make some adjustment. Any way you'll slice it, we're seeing a big drop. We've seen a 68% drop just since 2005 in the number of new mortgages that are being offered. And last month, again, in spite of 4.5% rate, the lowest rate you could buy your house for a 30-year rate in the last century, do you know what's happened? We've seen a drop in the number of new mortgage applications down to levels of 1996, December of 1996. I mean, if you're a realtor, you're probably pretty freaked out right now. My point is, the spending's not going to be there. Part of what's happened is the stimulus package, the tax, credit that people are getting as first-time buyers is gone, and the market is starting to slow back down again, and that's going to affect everyone in every different way. What else got to tell you? Look at banks themselves. Banks themselves are going to be in a very tough spot when they can't make money loaning money because people aren't borrowing. Right now, they're mostly making money through securitizations and things of that nature that are starting to become regulated. I'm oversimplifying because I'm running out of time here. But what I will tell you is ultimately, businesses are not borrowing the money right now. Businesses are not expanding. They're hanging on to everything. They're trying to do it as efficiently as they can, so they're not stimulating jobs. And small businesses are where most of the employment comes from in this country. And finally, no matter how much the Fed stimulates, the Fed has bought, $1 trillion worth of securitized mortgages to bring interest rates down. The interest rates have come down and people are still not borrowing. If you look at the history of what happened in Japan, there was this massive bubble that was happening in the real estate market, the stock market. Those bubbles shrank. And no matter how cheap people were able to borrow, they didn't borrow the money. So you might want to consider that maybe we're going through a detox. It's like we've been on drugs called credit, and we've been on drugs called overstimulation. And now we as a society have to cut down, be smart, and it's going to be a painful process, just like going through a detox. You got to get that poison out of your body. But this is a season called winter, and it doesn't last forever. Winter's followed by spring. There'll be another great set of opportunities. It'll probably take longer than we want, but if you're smart and you don't let things stop you, you can see where these opportunities are. So here's my point. If you've got exposure in the stock market, it's any exposure that matters to you, and it's not in some form of food or alcohol that grows during recessionary or depressionary times. There are obviously things you can invest in that can do well there. You might want to say, it's time to educate myself how to do well in tough times. You might want, as a minimum, reduce your risk, even if you miss some upside right now, just to see how things are going here for a period of time. Maybe we'll run between now and the end of the year with a really great stock market where it grows and moves up and down. But sometime, most of the people that I know that are the very best, sometimes in the late fall or early 2011, we're likely to see a major retracement, on a major scale, and you don't want to be in a position where that's hurting you. You want to be in a position where you can take advantage of that. And you can ride that way down and make money as well. So I'm not here trying to educate you on that, just to give you the alert to say, I got a little history. I work with some pretty brilliant people. These are some things you should consider that are pretty logical. And I'll give you one more thing, so you don't have to think it's just coming from me. Bernanke, the chairman of the Fed, who has been talking pretty much as rosy as he could, said these things last week. Number one, this is the worst labor market since the Great Depression. That's Bernanke. On housing, the market remains weak with the overhang of vacant and foreclosed housing weighing on home prices and construction. On the future, he's mostly fearful. He says, we're viewed that uncertainty about the outlook for growth and unemployment is greater than normal, and the majority saw the risks to growth as weighted to the downside. That's highly technical for we're uncertain about our future. We're uncertain that employment's going to get any better, and we're uncertain that we're going to be able to grow in any way. And finally, bank loans outstanding have continued to contract. Small businesses, which depend importantly on bank credit, have been particularly hard hit. Those are all the places of employment. That's where the jobs come from. That's where the opportunity to spend comes from. That's what drives the economy. So you might say, Tony, thanks for depressing me. You don't need to be depressed. Here's what you need to do. A couple things. Number one, just right now, make a decision. I've known people that lost an arm, lost a leg, and some people live in pain their whole life. Some people just make a decision one day and go, you know what? I'm going to find a way to take advantage of the cards that were dealt me. So get smart is step one. Get smart, know what season we're in. We're in winter. In the middle of winter, you're going to have sunny, beautiful days. It's not like winter's dark and horrible every day, but you got to know the overall trend so you know how to react. If you try to plant seeds in the winter, I don't care how hard you work, it's not going to work. Do the right thing, buy a house, do it at the wrong time, 2006 in the US. Doing the right thing at the wrong time, you're going to get hurt. So number one, get smart, know what season you're in, and decide you're going to find a way to take advantage of the situation. Number two key, put yourself in a position where you educate yourself. Go find the education, get it through our organization, anybody else you want, but educate yourself on not only the season, but how to take advantage of the season. There are all kinds of tools that you can use that when things go down, you do really well. Some of you are familiar with just the use of something simple as ETFs. You need to be educated. You need to know what you're doing. You don't need to do something. If you don't know what you're doing, don't do anything. Just get yourself out and get liquid and get secure and protect yourself. But you got to understand how to take advantage. Third, get yourself some role models that have done well in a market like this before. And this market's really unique, but there are people like Sir John Templeton. He just recently passed away as a friend of mine. I've studied him over years. He made money during the worst times. His belief was, in times of maximum pessimism was when you make the most money. He became a billionaire by making money when the stock markets were crushed, when World War II broke out and everyone was freaking out. He bought stocks so cheap because everybody was giving away that made him a billionaire. He bought stocks in Japan after the war when no one wanted anything in Japan. He went to South America when inflation was exploding. You can do well in very tough times if you're not fearful. If you decide to win, you educate the heck out of yourself, you get yourself a role model, and out of that, get a strategy, get a plan, and get it in action. And finally, measure it. Measure what you're doing, get that coaching. And the last thing I'd say is, in the middle of all this, if you want to be successful, find a way to add more value than anyone else is adding. That's the ultimate competitive advantage. If you can find a way to add more value to your company, to consumers, to your customers, to your clients, to your family, then two things are going to happen. You're always going to have a successful place in what you do because people need that value. You got to meet their needs. But also, if you can find a way to add value to people you don't get anything from, if you can always give much more than you expect to receive, if you can pull somebody aside who's having a tough time and help them, you'll put your own problems in perspective. It'll make your life feel more meaningful. And you won't just be thinking, oh my God, I'm losing my wealth. Wealth is psychological, spiritual, emotional, physical. Look, if you got all the money in the world, but your body's gone, you're gone. So this is an opportunity for us in winter to get closer to our family and friends. It's a chance to change the quality of our lives for the better. And if you're smart, it's a chance to do well financially as well. So this is my warning. This is my alert. Think about these 7 things I brought up to you and decide which direction you think the market's going. And maybe it's time to protect yourself and or prepare for a shift in the market. Hope this is helpful. Talking 100 miles an hour because I'm literally getting on a plane to go to Fiji and I'm going to miss my flight. It's 10:30 at night, but I didn't want another day to go by without giving you a message for you to consider. So live strong, live with passion, and I'll look forward to your comments and I'll look forward to seeing how you manage and hopefully take advantage of the many days and challenges and opportunities ahead. God bless.